So,
yeah, we don't even know.
oh, how's everybody doing?
Very good.
Good?
Yes.
Good. So we're setting up some food over there. Do me a favor, during this presentation, do not all just get up and go, right? So if you guys can, you go individually, or if you go right now and get it,
Right
come.
It's good to give instructions, actually, I like that.
But yeah, just don't like it when in the middle, everybody gets up and goes. So a couple of things we're gonna talk about. Kris is here to kind of briefly talk about what's going on.
Scare you straight.
And scare you straight. God knows he's scared me straight, so I'm trying to scare you guys straight. It's evolving and it's changing, for the good and for the bad, and how do we take advantage of that? Everybody knows James, and I think, one of the things I told James to talk about is on the lender aspect. I probably received, I don't know, 6 different phone calls in the last, since the Palisade fires kind of started about, hey, but they're not funding. Like, what do we do? I got this email from the lender saying they're pausing it, what's going on? So there seems to be a lot of confusion, even though I think, there's a plan in place of what's going on with these lenders, and there's a solution. They're not canceling your loan unless your property is completely burned down. That's a whole different conversation. But there's a way to go about that. So I wanted James to kind of highlight that. On my end, I'll tell you this. Kris sent me an article yesterday about an agent who I know very well. Very well. He's been doing this for like 25 years. Michael Bessie. You know Michael Bessie, right? Yes, you know Michael Bessie, right? Do you know Kobesi?
Well, if you read the LA Times, you'll know him.
No, I've known Mike Kobesi going on since I started real estate. He was like a big name. And the Department of Justice actually went after him for price gouging, right? And I think they went after a particularly big name in that pocket, especially. He owns that area, to make an example. Like, if we're going after him, we're going after everybody else. So the idea, and look, we've somehow got price gouging is not just residential real estate. Price gouging is commercial leasing. Price gouging is, a bagel I sell for $1, now I'm selling it for $20. That's price gouging. And I'm telling you guys, I've had a couple of conversations with our agents where I'm like, I don't know what we're not understanding here, but it's not fair. But the market, what if somebody wants to pay for it? I get it. Trust me, I understand. I would love nothing more to put my property on the market right now, and somebody comes, I'll pay you $20,000 a month to lease. I'd be like, yes, I get it. This is not 2021 when we were selling homes and they were overbidding, right? Until March 8th, or unless that time is determined to push back, but at the very least March 8th. LA is in a state of emergency.
It's been extended once already. It was February 6th, and then it was extended.
And look, they probably will extend it.
It's gonna get
30-day increments.
Is these fires are not giving up, so they're gonna keep pushing back this date. So as long as they keep pushing back this date, you cannot say, well, somebody wants to pay $17,000. Why can't I do it? Okay? The reason you can't do it is because you're attached to us. Because the last thing I want is my face and my name to be on Instagram as the brokerage that is gouging people, right? Because I read the article on Mike Kobesi, I'm like, oh, this looks bad. Like, this looks horrible for somebody that's in the community. This looks really bad. And I promise you, you're gonna see a bunch of agents, and the city of LA has made a concerted effort to say, hey, we're not gonna just come after you legally. We're gonna make sure everybody knows who you are. Right? They didn't put his name on there. They're gonna blacken his name out. It was they're gonna put your name, your face. Everybody in LA is gonna know that Erica Taylor was price gouging.
They're gonna see you down the town square.
So
Flogging.
So when you're in that conversation with your landlord, and she's like, hey, but I want $17,000 on at least that's $8,000 a month, and you're thinking like, okay, I can't convince this person that that's illegal right now, and you have to be comfortable with saying, you know what, I'm out. And I know that's difficult. I know. You look at the money and, you weigh the risks. I promise you, in this particular situation, the risk is way worse than the reward, right? Because that will be, chances are, that's going to be very, very bad. We had one, okay? We had an agent in our office. played by the rules, right? Played by the rules. Increased them normally, like nothing was unusual. Somebody reported to Zillow flagged them, shut them down, right? So like, part of that article states that there are a bunch of people out there, they call it activists, that was an interesting terminology that they used, that's going around and saying, look at that listing, look at that listing, and Zillow is just shutting it down. Right?
AKA cancel culture.
Yeah, so whether you like it, don't like it, have an opinion, it's the game that we're playing right now, right? So you have to play the game that we're in right now, and this is it. You have to be super careful, do the numbers. If you're confused, you know, if you have a listing on the market now, 10%, that's it. There's no confusion there. But if you don't have a listing on the market and somebody says, hey, I want to put something on the market, okay, this becomes a little calculation. Kris sent us a link for what HUD values these homes at, right? So if HUD says your house is in, 90024, it's a 3-bedroom, the rent on there is $3,000 a month. You can go 160% above that. So 3,000 times 1.6, whatever that number is, that is the max that you can go and still stay within some confined guidelines. Now, it becomes a little bit interesting because HUD goes to 4 bedrooms, and the situation that we have an example was a 7-bedroom. And in that case, it was like, look, man, you gotta like really go to the comps and look at the comps. And I would say, look at the comps and be a little bit below the comps, just to be on the safe side, right? And the comps were like 9,000, 8,000, somewhere around there for that property. They wanted to go at 17. I mean, that's a red flag right there. And the landlord was like, I want 17. If not, I'm gonna use somebody else. Use somebody else. Okay, so that's very, very important. I want to make sure I get that to you guys. I know Kris is going to cover a little bit. Yeah.
Do homeowners also get, some lawsuit on them or something like that?
So
because it's not the agent's decision to increase the price, right?
look, here's how I think, and this I don't know. I would assume that yes, the actual landlord will have some sort of repercussions, but the agents are going to get blackballed. The homeowner's not going to get blackballed, right? The homeowner may get a fine, may get litigation.
And I'm gonna step through this later this morning, very, very, very methodically, because it creates some issues. But, so let's just say somebody has an agent, and that landlord price gouges. And this is part of what we must understand. When lawsuits, claims, litigation come in, if a seller gets nailed, now we're talking about something different now, because now we're talking about criminal charges. So the agent, whatever his name is, in the LA Times, he was criminally charged under Penal Code 396, okay, which you can go to jail for up to a year and up to a $10,000 civil penalty. And then on the civil side, once that's all cleaned up, the injured party or parties, for example, all the tenants that didn't get that property because they were price gouged out, now have claim. Gotcha? Now, here's the deal. Do you think that landlord's going to say, oh, I take responsibility for this, it wasn't John's fault? No, they're going to get an attorney and they're going to cross complain against their agent, broker, us, and good night, Irene, party's over. Okay, so we'll go through this in a little more detail. But the first salvo, and I'm going to say it again, you know what a salvo is? First shot. Your first salvo with your customers is, hey, you need to talk to an attorney. And I'm going to drive this. I was with one of the other team leaders, and Henrik and I were talking about this. We're not going to argue with anyone, because I know it's like, oh, but.
Yeah, there's no argument here.
Okay, I think 396 wasn't made. The fair market rent contract made. All our job is to make sure that our agents understand, not put any of you in harm's way, and certainly not put our clients in harm's way. That's how we meet our fiduciary duty to our people. You meet your fiduciary duty to people when you tell them, here's what I know, and here's what I don't know. You need to talk to an attorney. Talk to anybody about that.
Mike, you had a question?
It's not so much a question, but it's literally the situation. Hey, I did.
It's like I've heard that voice before.
Yeah, right. Yours as well. Proper record. The situation actually came up this morning with me. I got text from landlord proposal, and they asked me, what the fee would be. And my plan is to send them comps this morning and to send them the article from Carr. It breaks down the gouging and also the HUD form. But in addition to that, in my email, I'm going to state that not only do I suggest they speak to an attorney, but I will not represent them unless I have verification that they have. So I want to go even take that next step where I want them to show me, where I want something from the attorney saying that they spoke. Is that going too far?
So I think,
So I would say, so as long as, so let's just say you and I had a conversation and you said you're gonna email too, so that's fine. So if you were just to say, and then, so you go through your laundry list of things, read this, here's this, so on and so forth, we're in a crazy state of the world right now. And at the end of the day, you need to talk to qualified landlord tenant attorney. Okay, if you want to add to that, and I'm not going to represent you, no, that's up to you, but you don't have to. Now, if you get to the point where, so let's just say, play this out, and then they call and say, okay, I want 20, my attorney says I can get 20 grand for my $5,000 place. Okay, well, not sure your attorney was, but yeah, this isn't gonna work. Okay. Okay, so at that point, but you can handle it however you like. So I appreciate your heart on that, because you're like, hey, dude, I'm not gonna get in trouble with you, right? But at minimal, and this has to do with documentation of conversations with our clients ongoing, regardless if the price gouging thing or not. Because if we get nailed on claims from either the Department of Real Estate, I'm going to share a little love letter a little bit later this morning from them, and from plaintiffs and attorneys. Our agents walk off and say in deposition or mediation, but I told them, oh, great, can I see a copy of the email from that conversation?
Yeah.
Oh, but they're going to just believe us. No, they don't. They're going to err against us. So this has to do with how you, your transaction management strategy, okay, and then how you properly represent your clients and document conversations. Yes, we benefit, and it benefits your customer. Okay.
and can I say one more thing before we go on? The second frequently asked question I've been receiving is what's going to happen to the market? What's going to happen to the market? What's going to, and one of the things that I'm telling everybody is, we're probably going to have probably one of the worst first quarters that I think statistically, in LA, the city of LA that we've had, going back years and years. Whenever something like this happens, there's an initial pause. You guys remember COVID? It wasn't that long ago, even though it was long ago. So when it first started to happen, the initial thing was like, stop. Like, you stop because you don't know, right? So like everything kind of almost comes to a halt. And then people kind of said, okay, I'm getting a lay of the land, and then you got to go into work speed. So I think the first quarter of 2025, and we're seeing it through January, is probably going to be one of the worst quarters that we have documented. And then you're going to see Q2 and Q3 really start to explode, right? And because I think at some point, people are going to get to a point like, all right, let's go. I don't know where I was reading a statistic that 60% of the houses in the Palisades and in Altadena are what's called underinsured. Meaning, I have a $2 million house that burned down. My rebuild policy has $400,000 on it. Well, I'm not going to be able to rebuild the type of house that I had for $400,000. And the reality is, when this happened, I went back and looked at my insurance policy, right? And mine was $450,000. I'm like, I built like 1,000 square foot house, like half the house that I had. So there's a lot of people. My parents, $250,000. I'm like, holy shit, right? And obviously that's the cost of the premium depends on that, but a lot of people are in that situation. So a lot of those people right now don't have time to think about buying. They're just trying to get out and get somewhere situated, figure out what the next step is. And then you're going to get a point where you're going to have this boom of buying. And you're going to start to see prices this year really go up in LA, right? This is going to test the housing market in LA unlike anything else. And the reason I'm saying this is when you're, as a real estate agent, you're figuring out, okay, how do I do this? I said this before. You need to be able to reach out to these people, right? You need to be able to reach out to talk to them in the way that we talked about before, right? How can I help? How can I support you? What are you looking to do, right? People when they're in trouble, they appreciate you reaching out to them and communicating and ask them how they're doing, how can I provide? Don't call them and say, oh, you think about selling your land? No, that's not what I'm saying. Just be there for them, right? They will appreciate that and they will work with you when they're ready to buy, because I guarantee you 60% of them, and across the board, realtors in LA, it's like, that's the thing, they're gonna buy. And not all of them are gonna go right next door and buy Malibu or go to Brentwood. There's gonna be a good chunk of them that go to Encino because it's close, or Studio City or Sherman Oaks, right on this side of the hill, right? So business is gonna really, really pick up in LA. So right now, ask yourself, what's my lead generation look like? How am I prospecting? Who am I talking to? You know, Joe and I talk about every single day. Are you having those 10 conversations? And every single day, Joe comes in is like, I had my 10, right? So, and Joe, you can speak for it. You've been doing that for a couple of weeks now, I think, since we talked about it. 10 conversations every single day. Is there anything other than just good conversations? Is there anything productive that came from it?
I mean, things come from it. I mean, no matter what, of course, when you call, you're gonna get people, most people listen to me. And they'll just say, not interested, thank you for calling. You know, and then some people, you know, like, oh, you know, I'm actually looking to do this or looking to do that, but no, it's productive.
Yeah, so to me, you know, if you're not having 10 conversations right now, ask yourself, what am I doing? And I mean, truly ask yourself, like, what am I doing? If I'm in the business of talking to people and I'm not having 10 conversations a day, we're not saying 100 conversations a day, we're saying 10 conversations a day. So if you're not having that conversation, ask yourself why. And if the answer is, I don't know who to call, I don't know what to say, yada, yada, things like that, let me know. If the conversation is, I'm deadly afraid to pick up the phone, call a therapist. I don't know what to tell you on that, but you realize that we're in the business to talk to people, okay? So make sure you get comfortable with that. No, I mean, we're in the business to talk to people. If we're not talking to people, then what are we doing? Right, and talking to people could be everything. Like I said at the beginning, how are you doing? How is your family holding up? Is there anything I can do? That is talking to people, right? You know, you talk to a dentist. Trust me, at some point the conversation is going to lead to teeth, right? It's just a natural form of how things go. So, you know, I just thought, whatever, you talk to an accountant, a tax question is going to come up at some point when I'm like, how is everything? Yeah. It's the same concept, guys. You don't have to pitch to sell the house. Have a conversation with them. It'll lead to real estate talk. Any questions?
Yeah. So one of my clients, their house burned down in Altadena. I'm gonna start looking for them to have a temporary home. They have 2 kids. I haven't had the conversation with them if they want to keep their property, what type of insurance they had, if they're gonna want to stay and try to rebuild, if they're gonna want to sell. And my question is, if they do want to sell the land, right, their house is completely gone. Like, what is that process for me as an agent? I don't know anything about.
So that's a very, very good question. Okay, and this is why I think I'm gonna bring James into this conversation. I don't have a house. Insurance gives me X amount of money. I don't want to bill for time purposes, cost, whatever it is. I'm just gonna go buy something else. But I still technically own the land. The bank has a loan on it for $1 million. For example, my loan is $1 million. The land is valued at $700,000. I'd like James to tell me what happens at this issue, because I truly don't know. Does it become a short sale? So is that what it is?
I mean, they want to contact their servicer. You want to take step, each step. I'd say this is so new that we aren't hearing these. The first time we're kind of seeing this come about. I would contact the loan officer, say the loan, contact the servicer who kind of holds the loan and kind of get that giving payments to. Probably escalate. They'll probably have a process that looks at what the unique situation is. Contact your insurance rep and see if they're underinsured, overinsured, etc. Just kind of weigh all the options. It's still so fresh that we're still like, that's a long question. But I would definitely have them just go through the chain of command to get all the information answered. We're seeing that there might be some forgiveness with some payments for like 3 months or so. That could continue to expand onward. It's only sold. I would also, some of the insurances as well will actually give a percentage. We had an insurance person come speak to us yesterday. They'll give, there's an insurance amount that can almost pay the mortgage for them for a small duration of time while they look for a secondary property. But it's hard to have true payments. I mean, how do you do that? So it's not a direct answer, but I would just go through the chain of command, for that person.
Because that's going to become something. So to answer your initial question is, right now you say, okay, absolutely, let's look for somewhere, right? Guidance, have you talked to your insurance company? Are they starting to review your policy? Have you reached out to your mortgage company to ask for forbearance? Right, as much as I love these banks, I don't think they're gonna automatically do it. Like when I log in to pay my mortgage, it says, if you've been affected by fires, please, there's programs out there, so make sure that they've reached out to their lender to say, pause my mortgage, right? So these are, you give them almost like a checklist of things, because in that moment, I just imagine all they think about is, I need to go live somewhere, I don't have any clothes, I don't have any, everything's gone. So, talking to them about thinking about selling, they're so far at that moment away from like sitting down there and understanding what they're doing. So your service to them is up to your insurance, up to your thing. Maybe I can help you. I can call somebody for you, right? Just be present in their life while you're helping them kind of look for a rental. The first thing anybody should do is call their insurance company, because insurance pays you to rent. So that's the first phone call that should be to your insurance company and be like, okay, what does this look like for me? And then from there, you can start to kind of build a picture of what it looks like moving forward. Yeah, like I said, are you underinsured? Are you overinsured? And you're not the only one, yeah.
That's what my in-laws did. They lost a home in the Palisades and they're renting, and he said insurance is paying rent.
Yeah. Well, most insurances are gonna pay the rental, so that's for sure, but, you need to find out before you can figure out, okay, there's a $5,000, there's 7,000, what's insurance giving you? Are you putting it out of your pocket, or, so find out, if insurance says, I'm paying you 5,000, then okay, it's 5,000.
What about what if they do come back and say, oh, well, we just want to sell our land? We want you to represent us, like,
So what I would tell them is absolutely, I can help you out in anything that you want. There's a lot of gray area on how this is gonna work right now when it comes to the lenders. Let's clarify all of it first, and this is where the conversation with the
it has to
bank
be like
comes in.
one step at
Yeah,
a time.
because
So many moving parts.
my logical brain says, bank, you owe me $1 million. Okay, you wanna sell it for 750? Great, you owe me $1 million.
Right.
So figure that out, right? So how does that come in? I don't imagine banks taking a massive hit on this.
Yeah, so I don't know how many of you, because one of the things I'm gonna talk about at some point today on the presentation side. The first question I'd be asking myself if I'm an agent in the room, and again, we're gonna talk about this later in the prior to some of the presentations, is what is my current seller questionnaire look like? Okay, because this really isn't that complicated in that it's, if you go from the very base level, and yes, I agree with Henrik 100% here. They need to talk to their qualified professional, their insurance agent, so on and so forth. And at the end of the day, it's the same math equation on every one that go out. Meaning, if the market value is here and the level balance is here, great, here's your net sheet, here's your equity, okay? If it's the other way around, then we've got to figure something else out, short sale, whatever. So that's what, but this is really no different than any other point that you go on, because you've asked really good qualifying questions about the situation. Does that make sense? The other thing will be obviously critically important is this little thing in California starts with a D when you sell a piece of real estate.
Disclosures?
Disclosures.
Yes.
Okay, now, anybody driving in the neighborhood is going to go, yeah, I think something happened here, right? But that's where some of these things, because there's going to be questions, by the way, you represent a buyer. Hey, is the soil contaminated? What's your answer to that? I don't know. I'm going to go over this very quickly in a little bit. A document that you have literally all your clients sign, and you're going to be amazed at what it says. And 99% of you in the room, when I start to read it, you're going to go, oh my gosh, I didn't know that document said that. That's my prophecy. We'll see how that goes.
So just so we don't keep you guys here all day, Joe, is that important? Yes.
Just really quick, just to piggyback, I know back in the day when we had a lot of short sales, I was told to do, what I did was to ask the client for authorization to speak on their behalf, to call the lender, to speak with their lender or their financial person, to work out how I could do a deal, to have them go ahead and reduce their debt. It's gonna be a short sale in some aspect. They're not gonna be able to get the full amount back, so.
Yeah, I imagine.
So there's something when I coach people, there's something I say to them, it's this: assumptions control behavior. Okay, by the way, anybody remember Walter Matthau and the bad experience?
Yeah.
Okay, good. So you assume, what do you do? You're making an ass out of you and me. Okay, so don't assume, because assumptions control behavior. So I'm not disagreeing with Joe, but every single client and every situation is gonna be unique. You're gonna have some buyers, for example, that go, I'm not seeing a lender, I got 1 million cash. I can buy a house all day long, right? So you need to take it, so don't assume anything, don't, please, 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 I pray to God, don't go, well, I heard from an agent, I heard from an experienced agent. By the way, I'm an experienced broker, and I continue to say, I'm not gonna give you my opinion, I'm gonna give you what is like the fact, reality based on contracts. But don't assume, because your assumptions control your behaviors. So yes, Joe, you're correct, there may be some short sales. So if it were me, I'd start taking, for example, I'd start eyeballing maybe this little car form for a short sale, just in the event you get a phone call. Right, you can up your AR, you can go to AR.org and go, short sales. And you can be, so that way if the phone rings and you start asking qualifying questions in your free listing questionnaire, and you find out that maybe this is in that realm, then you take the next step. Now, by the way, and I'm gonna make a big point of this in a little bit. Everything pretty much your clients sign say, talk to an attorney because we can't give you legal advice, so on and so forth, and that's always been the case. It's always been the case. The agent that was arguing with me this morning from another market center. I'm like, well, do you read the forms that you have your client already signed? Because they say all over the place. So short sale addendum is going to say this. Your agent doesn't have expertise in this area. You need to talk to your blah, blah, blah. Okay. So we need to, as an industry, we need to get a higher self-esteem so that we're so comfortable that we can look somebody in the eye and tell them what we know under the scope of our license and tell them what we don't know. That's professionalism. Making up answers and guessing and giving legal advice, which, unless you're an attorney, is illegal actually also in California, right? So don't set yourself, this is a great time for all of us to slow down so that we can serve people and not get them in a rush, we get in a rush. Because everyone's hysterical.
Yeah.
Especially agents. But my client said, my client said, my client said, my client said.
Yeah.
Okay, great, go ahead and talk to Gavin Newsom, I guess. I don't know what told you, I haven't talked to Rob Martha, but here's what the rule says.
So we're gonna have Kris come up here in a little bit, talk
Sorry,
about,
my energy's a little low today, I apologize.
but I wanted to make sure I have James kind of talk about what's going on, talk about the market and do talk about a little bit of the positives that you're seeing
Sure.
and kind of what that means. And then I'll be out of your way, Jim.
Hey guys, how are you? Good to see you. James McKibben here, Movement Mortgage. For those of you who don't know me, I've been a lender here for about 2 years. So just to kind of piggyback off what the guys are saying and then jump into some stuff that I wrote today. You know, one thing is it does look to be a pretty hard start to the year. You know, we're seeing just everything happen out there that we can't control. So one thing that I'm kind of telling my agents and my loan officers, we have to control the controllables. We can't control rates, we can't control inventory, we can't control natural disasters. We can control what we know. And I kind of dissected what I'm seeing realtors do that's working and not working. And a lot of it is just, you have to kind of be in the know or like at least general knowledge of what loans are. Because I see it like say a realtor that says, maybe I have a conference call and the realtor's like, I don't know anything about loans, or I don't know what that is. Clients are so, they're so capable of doing research today. A lot of times they know stuff before we do. And so what you say matters, and we win and lose deals for the smallest things. Not calling somebody back in 5 minutes, not knowing about a loan program, or maybe another realtor does. So make sure that you know enough out there. 10 years ago, if you knew something, like, how do you know all this? But now they're like, no, I know it, I'm good. So I want to touch on something. And so for me, I've been doing loans for about 19 years. I worked at Bank of America for 12 years, worked at a big bank. And then I got into the mortgage banking space. I found that coming from Bank of America to mortgage banking, I was losing more deals for product than winning for price, because things are so nichey. And so if I look at my live pipeline, every deal is like a one-off. And so I want to touch on some products and some terms. So first off, we had what's called TRID. It came out in 2015, where the loan estimate and the closing disclosure replaced the GFE, the good faith estimate, and the estimated HUD. And so these are just terms that you should know. So if you hear someone say, what's a loan estimate? A loan estimate is basically a sheet that shows the rate is, what the loan amount is, what the fees are. And then after we have that signed, we send out what's called a closing disclosure. Everyone know what that is? CDs. Once the CD signed, you have to wait 3 days, not including holidays or weekends. So I've heard realtors say, I've never heard of that. And I'm like, you kind of know a little bit about that. You know, these are just general standard forms. If you don't know, it's okay. You have to be able to think on your feet and you have a lender that you can contact. So know those terms, the LE and the CD. A lot of agents will ask for, send me the DU, right? Which is desktop underwriting. Send me the DU. But do you know what that is? So when we run what's called our AUS, our automated underwriting system, it's usually either DU, which is desktop underwriting, which is Fannie Mae's version of an approval in our system, or LP, loan prospector. So a lot of people want the DU. DU is basically a lender running all the data through your system and getting an approval. A lot of agents ask for it and they say, do you know what that is? They say, I have no idea. And I'm like, you're just so groomed to like ask for stuff, So know these general facts.
We've also touch up on the pre-qualification versus pre-approval too. We have
Yeah.
a lot of questions on that too, while we're on the subject.
There's not a set like definition, but a pre-qual is more when a loan officer like myself goes in and sees an application runs credit, and a pre-qual is without really all supporting documents being verified. It's more of just the application, how someone states it. That's pre-qual. Pre-approval is more where we have actual supporting documents to solidify income levels, asset documents. So pre-approval is a little bit further along than a pre-qual. And of course, even take it a step further, we can get what's called a full underwrite, which is, where we actually send it to an underwriter before we actually have an accepted offer. And there's actual data on that show that you have about a 30% better chance to get an accepted offer. But a DU, the thing about DUs is DUs are easy to manipulate. Because I can go in, not that I would, but I can easily change the income or make the DU work just to appease the agent. The DU doesn't really mean a lot. People ask, it's like, it doesn't have to go to an underwriter to get a DU. Does that make sense? It's easy to, it's just, we can just kind of make it work if we need to.
So the DU is basically what the lender states, whether that what's.
It's what the borrower states in the system. Yeah,
Exactly, yes.
yeah, exactly. It's not verified for, by an actual underwriter who's the one that approves the loan. So you want to kind of know these terms. And these are important. Like I said, these have helped my agents really go bigger versus not. Let's see. So, there's something called mortgage insurance, right? Mortgage insurance is when someone puts down less than 20%. There's different versions of it. You have what's called BPMI, which is borrower paid mortgage insurance, which is a separate payment in addition to the rate. You have what's called LPMI, lender paid mortgage insurance, which is built into the interest rate. I don't know a little bit about mortgage insurance. FHA dropped theirs to 0.55. It's really helpful. And we always have the conundrum of, do we do a conventional versus FHA loan? A lot of these do mortgage insurance. Somebody has low credit, the conventional mortgage insurance might be really high, because the conventional mortgage insurance, that percentage can change based on the borrower's particulars. FHA is a set fee. So that's something that you want to kind of know. Let's talk about loan programs. So does everyone know what an FHA loan is? Okay, FHA loan, it's really popular for first-time home buyers. You don't have to be a first-time home buyer. There's 3.5% down. One of the better things about it is you can go to a 47% front end debt to income ratio and a 56% back end debt to income ratio. So there's more leniency on it than conventional. FHA has some cool features where you can use what's called a non-occupying co-borrower, use blended ratios. FHA does have 2 forms of mortgage insurance. They have the upfront mortgage insurance premium, calculated at 1.75% times the base loan, it gives you the final loan. You have your monthly mortgage insurance. So I think the main thing is it's 3.5% down, and it's a little easier to qualify for. We're seeing a lot of second mortgages. Does everyone know what a second mortgage is? So it's usually either a line of credit or a fixed second. And they're popular. They're very relevant. They're very relevant for you because something like 85% of people buying homes are using equity in their existing home to buy other property. So it's really important. If somebody has a lot of equity, they're always looking for your 10 calls or what have you. Why not call and say, hey, you buy a house in 2008, it's worth a lot of money. You thought about buying another property? You can probably get a 20-25% down payment out of that home and leverage to leverage. That's how people really make wealth, by buying a second property. Because if the average homeowner has a 45 times net worth than a renter, someone that owns 2 homes has roughly a 62% greater net worth, because they have the appreciation on 2 homes, so on and so on. So we can do second mortgages for bank statement loans now, profit and loss loans. So these have really emerged. Someone that's self-employed that says, oh, I can't get a second mortgage, you know.
What are you seeing as the rates for the second, P and L loan?
They're like 8.75. It's not too bad with where the rate market's at, you know? I just quoted one. That's a unique product, a profit and loss loan.
But just so you know, I have a second on another property that I have, and it's not, it's like a regular, here's my tax returns type of second, and my rate right now is 8.5.
Yeah.
Okay, so for P and L,
Yeah.
to be 8.75, that's excellent.
Yeah, that's a
Are
good point.
Are there banks that are offering home equity loans instead of lines of credit? Because it used to be popular at the B of A times in the
Yeah.
90s, 2000s.
Well, like a HELOC is a home equity line of credit by
No,
definition.
Right, I'm
Um,
saying instead of a HELOC, home equity loan, installment payments for a set term.
We're seeing more fixed seconds, you know, we're
Okay.
seeing more fixed seconds, but some people just aren't comfortable, even though the Fed's supposed to drop rates a little bit.
Yeah.
And, you know, line of credits are tied to prime.
Of course.
We don't know what the Fed's gonna drop. It's too early in the year. Some say 2, 3, 4 times, but we're in kind of a question mark. We just don't know. Rates are supposed to go to 6.36 on the year, on average. Home values are supposed to go 3%. Inventory is supposed to go 15%, but we live in a hyper local market. You know, not everybody just had this impact. So some other products, these are just very general stuff. Does everyone know what an ARM loan is? Yeah, so adjustable rate mortgage, exactly. So ARM loans are usually fixed for 5, 7, or 10 years. They're a fixed rate, and after that duration of time, they go every 6 months, they adjust to the fully indexed rate. And that's attached to the margin plus the index. And this is a little bit technical. Why people use ARM loans is they don't feel like they're gonna be in that loan for very long, and they can refinance out of it. These are good things to know. Your clients are gonna ask you. Everyone know what interest only is? What interest only loan is? Not necessarily, yeah. Interest only is, let's just say somebody has $1 million loan, they have an interest only loan, they make the payment, they're only paying the interest, so the mortgage balance doesn't change. It stays the same. Versus a fully amortized loan or a principal and interest loan, every payment somebody makes, their balance drops a little bit, they start slicing into the principal balance. So they're just in terms for you guys. I know we have a lot of newer people here, and some very seasoned folks. That's right.
So, for the interest only rate, loan, the rates are much, better than for the 3-year lease.
Interest only, that's a great question and very intuitive. It really depends on the loan to value. Interest only loans have been widely used lately for more like non-qualified mortgage loans. Usually if it gets a 20+% down on jumbo loans, or when banks can balance sheet their high balance performing loans, we see some pickup in rate. So it's really just based on the specific scenario that it can be. But the benefit of interest only is the payment's lower. And then they can also recalculate when they make a chunk of payments towards the balance, it recalculates. Because it just drops the payment based on the new lower principal balance, keeps the same rate. So this is why you want to have the right lender. And a lot of the experts like Tom Ferry's and stuff have said this year, 2025, it's more important to partner with the right lender ever before. And that's me or whoever it is, because it's challenging. Lenders have to be available every hour of the day. You have to put up with clients just constantly being nervous every second of the day. The rates are like this, you know, the affordability index is, I feel like that, I worked in yesterday, the loan amount was like 800,000, 850 sales price, the payment's like $7,000. You know, so it's high, right? It's just, we're not used to that as we were a few years ago.
Good news, they can run it for 30.
Yeah, that's right.
Just a joke.
Yeah. So these are general
That's a
stuff.
price gouging joke, like not.
Yeah, right? Yeah,
It's not a joke.
Another thing, you know, which has helped me be a little bit, let's say busier, is living in these new non-QM loans, the non-qualified mortgage space. A lot of people can't go full time. They write off income, they have a job for 6 months, they go from W-2 to self-employed. These are things that are not favorable to lenders. So we came up with what are called bank statement loans, where we take most of the time, it's a 12-month average of someone's bank statements. I had a client that hadn't filed taxes in 3 years. She finally filed, she showed a lawsuit. With the bank statement loan, we don't care. So we take the bank statements, And for the most part, that's their income. We back out an expense ratio. Profit and loss loans have become really popular. Profit and loss are for self-employed. These are really cool. They're kind of like an easier version of bank statements because we don't look at bank statements. We just have a CPA, write a profit and loss for the last 12 months. That's their income. We don't have to back it up with any supporting document. So it's very outside the box. I hope it doesn't go away. And like saving a lot of files, and it's so easy to do. We have a loan where you leave the employment blank. It's just a no ratio loan. Close like 5 years, but they're helpful. I'll give you an example. We had a client, she inherited a house, 1.2 million, no job, has like 2,000 in the bank. We got her 350,000 out. She had equity on a no ratio loan. She couldn't do bank statements, she couldn't do profit loss. She has no job. No ratio, we leave her employment blank. It's great. She has money. She wasn't eligible for a reverse mortgage. So make sure you're asking the right questions, these qualified questions. Because so many times I find that I get a client that has a loan and they work with the right lender or agent who just didn't listen and connect it. And they're just, I'm like, you could have done this a year ago. And they're like, what? I didn't know that because it's right in front of them. Two more things. We're doing more construction loans. We have a lot of products launching around this terrible situation, but also there's a lot of construction products out there. We can do ground up, no money down on VA, 3.5% FHA ground up construction. You know, we can do, conventional 5% ground up, a lot of rehab financing. So if you're looking for more niches to get into, make sure that you listen to those clients, go meet your contractors, your builders, your plumbers, who like work in those spaces, and find a way to get into that way for business. It's always cool to see a house built or refurbished. Fun to be part of that project. Look for non-mortgageable condos. A lot of condo complexes right now are not lendable due to a lot of reasons. We have a lot of non-mortgageable stuff. Let's see, more things. Buy down. Buy downs are pretty popular right now. The market's kind of, the data shows that we're going to see appreciation, but it is a little bit stalled. It's a weird month right now. And so look at buy down. What's a buy down? Anyone know what a buy down is? A rate buy down? I know Joe does. So there's two forms. One, you have what's called a permanent buy down. When you look at the rate sheet, let's say rates are 7%, round number, pay a point, which is 1%, the rate might go to 6.75. If we look at what's called the yield spread premium and see how far a point, half point, whatever is the buy down the rate, that gives them a permanent rate that won't change, permanent buy down. One that's been more popular is the temporary buy down, the 3-2-1, 2-1, and 1-0 buy down, where someone has a 7% rate. With that same example on 3-2-1, the rate on year one is 4%. So if you have a seller or buyer that just, if the payment's not comfortable, seller hasn't been able to sell the home, don't be afraid to ask for a seller concession to pay 3-2-1 buy down plus closing costs. So with 20% down as an example, or FHA loan, the seller can give 6% of the sales price towards buying down the rate, closing costs. So create business out there.
And for commission, it's 3%.
It depends. Good question. So if it's with 25 with 10% down to 25%, it's 6%. Only 10% or less, it's only 3%.
Anything under 10%.
Anything under 10% is only 3%. Yeah, but I know that because I've been seeing these. They're called IPCs, which is interested party contributions. So there's a grid. So it depends on the loan program. But yeah, it's still 3%, or there's a loophole. They can put down 10.01%, just another dollar.
$10.
Basically, they get into that bracket. They get a 6% concession. So this is getting a lot of deals done. I've seen this just emerge the last like 2 weeks. Lastly, so Henrik asked about what we're seeing. So I have like maybe 4 or 5 deals closing in LA County, and I saw this bulletin, and it's like we can't close because it's in LA County. And I'm like, what are you talking about? Like. And so it's been considered a disaster zone by the GSEs, which is Fannie Mae, Freddie Mac, and a lot of lenders follow those. So really what it means is funding has been temporarily halted unless we can get an inspection done, where it's a drive-by inspection. Someone goes out from the appraisal team, they take pictures of the exterior to make sure the home's standing, or we can have a realtor take pictures and send them to us that actually have like the date on them. However, we can get these waived as well. I had one that was like 30 miles from a fire, and I'm like, it's not even close. And my credit risk team analyzed it. They said, we approve waiving this because it's supposed to close. Because people that are in Washington or on the East Coast or wherever, they think of LA, there's a fire everywhere. They don't know how different markets are impacted. But really, it's not that big of a deal. It's just one more thing to have to get through your clients that are panicking. Everyone's so on edge, every transaction's tough. Really, they'll send someone out, it takes 2 days, or get it waived. Make sure you ask your lender. You get the pictures in, it's done. We can even move it what's called prior to fund versus prior to docs. If you have to close, we can do it just before funding. They can still sign loan docs and do it. If you're tight on your escrow timeline. I have a lot more to go over, but I don't want to take your time. So are there any questions with these programs, with terms? I mean, really getting to know. It's hard enough to prospect right now, but you don't want to have a deal on the hook and then lose it because you're not controlling what you can control, which is your product knowledge.
Yeah, I have a question. If you're 5 or 7, your rates are typically lower.
Yeah, so it depends again, like you would ask. I mean, ARM products are really for jumbo loans. And it's usually when you have 20+% down. So there really isn't like a program with like 5% down for a conforming ARM. There's no secondary market for it. It's not saleable. So it's really case by case. I think the lender should really evaluate and say, okay, because they'll be able to see that. I mean, my goal is always to get the best deal for the client. I would look at it and say, hey, there's actually a really cool 76 ARM, which is actually your fix and then adjust every 6 months. Then I'll kind of get the differential.
Yeah.
Of the rate of payment, and some clients are conservative, they're like, hey, we still want a 30-year fix, but it just depends. Yeah,
Because they used to be at least 1 or 2 points lower.
That's not that low right now.
and so it wouldn't be that much, maybe a half point, maybe if you have like the right product. However, it's not that much lower.
I think the lenders, they don't really want to get this.
There-
We learned in
There's
2008.
these things called
They don't-
yield curves. And all those rates, so the differential between fixed and not the lender, by the way, James, awesome. But it's all based on yield curves. So for example, if the expectation is that in 4 years, the economy is going to tank, right? You'll see that reflected in those yield curves. Every now and again, you'll hear we're going to talk about an inverted yield curve. Okay, so there's like the normal economic that you teach in college or high school. And then you get these like, oh, this is weird.
Exactly, and it's even harder to qualify for ARM with lower rates sometimes. Lenders will use like the note rate plus 2% or plus 6%, for that reason, because they want to make sure they want to look forward. Your lenders always look forward. So, but it's worth looking at here, right, Gil?
James, isn't the debt to income calculated based on PITI for the ARM loans?
Yeah, so actually I have that on my sheet. I'll talk about DTI really quick. So debt to income ratio, you have what's called front end DTI, which is your new proposed housing payment divided by the client's income. Then you have back end debt to income ratio, which is the new proposed payment on the house we're buying or refinancing, plus all of their debts, so student loans, car payments, etc. You're divided by the income. That's back end debt to income ratio. Back to your question, it's always off of PITIA, which is principal, interest, taxes, and insurance, HOA. However, ARM loans can actually be harder. Same with interest only. Interest only, a lot of lenders will use like a 20-year amortization. Even though it's an interest only payment, they'll amortize it over 20 years from a qualifying standpoint. For that same reason, just based on the conservativeness of not wanting to default, there's a higher default rate. So hopefully that answers. the
Yeah.
question.
So thank you, James.
Thanks, guys.
Everybody know Kris here? So Kris is go up here, but I'll say one last thing before you guys, I don't talk again. If you're in escrow right now, please do me a favor. Reach out to your lender, reach out to your insurance company and say, I'm in escrow. What am I saying, delays or anything? So get ahead of it. Don't wait until they reach out to you, but like, you have an issue, just get ahead of it. Because if you're in escrow, you can get ahead of it and say, here's everything where the property is. You don't have to kind of have a pause at the end. Maybe they can do some of that process in the beginning. So make sure you reach out to escrow and insurance. Kris, the floor is yours. My golf so hazard.
How y'all doing?
Yeah, great, yes.
So somebody says to me, hey, so how's that LA gig going? And I said, it's kind of like the feeling the guy that's got, when he just fell off the 40th floor of his hotel balcony, and about halfway down, he's thinking to himself, so far, so good. Yeah, right. So I made a couple of notes as these two gentlemen were talking, but one of the notes I had made yesterday when I was up in Calabasas, actually, yeah, yesterday, talking with a group of real estate professionals such as myself. I had made some notes with some questions because I ask myself questions all the time. You ever talk to yourself down here? Okay, good. So what do you call yourself? I call myself Kris. Right? Every now and then I'll say, hey kid, well, I'm not kidding anymore, so I quit that one, right? But here are the questions I wrote down for the group up there. How's my lead gen? In my world, I still call it prospecting, but nowadays it's, Tom Ferry's the world that have softened the term, right? Because we don't want to be too harsh. We call it prospecting, right? You take a pick and an axe and prospect. So how's my lead generation? How are my presentations? Now, our industry that uses that term can't be quite loosely. I'm going on a listing presentation. So part of my time with you today, for those of you who hang around after the meeting, I'm literally going to walk through pre-listing questionnaires, pre-buyer consult or buyer consult questionnaires, buyer and seller packages prior to them signing a listing agreement or a buyer agreement. How to ask for the order, how to overcome objections, so on and so forth. So if only one of you stick around, I'm giving you the full show. Okay. So how are your presentations? How are my systems? How are my systems? I have the good fortune with speaking with many of you ongoing as situational things come up. And some of you have some really good systems, and some of you work with some agents who you yourselves are shaking your head going, oh my gosh, what a train wreck this is. The reason the Tom Ferrys of the world exist, candidly, is because ongoing agents generally don't lead generate, and our systems are horrible as an industry. That's what gave rise to coaching companies years ago. Okay, so how are my systems? Oh, and then by the way, the last note I wrote is, how is my knowledge? How is my knowledge? Our industry struggles with defining our value. Your value ultimately is in your knowledge. And I alluded to this earlier. It's in the knowledge of what you know, and it's in the knowledge of what you don't know. You need to defer to a lender, to an insurance person, to a titler or escrow officer, to a tax professional, so on and so forth. So those are the questions that we're always asking our team. How is this going? Okay. For those of you now, I think I'm embarking on my 6-month anniversary here in a week or so with y'all. And it's been a phenomenal journey in that, I didn't come here I wasn't coming to do this to make friends, and I've made some really good friends and acquaintances that are really great. But as I've said before, my goal here is to make a difference. I'm 34 years into my career. I was almost going to say I'm 34, but I'm not. I'm 34 years into my career. And the only reason I bring that up is because the perspective that I bring as your broker, and when I put my coaching hat on as your coach, is a perspective based on real world observation. I did a presentation last week at local MLS, and I went through my glamorous track record. On paper, it looks really great, but right at the very end, you know what it said? I'm a practitioner. We got a buyer broker signed last week. We had a listing that just went into escrow. So when I bring these things to you, I'm not trying to hold you to a higher standard that I don't hold myself. So as we go through this morning, this isn't, hey, here's what you should do. It's here's what we do, how we practice as a real estate group. That's my small little brokerage that I own with Kyle, my son, who, by the way, is going to be your new file review specialist for the market centers I work with. More to come on that. But I'm going to bring you a perspective. I always bring a perspective based on the real world. Now, you're going, what's this paperwork? This is my PowerPoint for this morning. Read those notes, okay? Got that? Okay, there's my PowerPoint. So price gouging is a thing. Price gouging is a real thing. I don't control the laws. We don't control any of that. All we can do to keep you out of harm's way is let you know what's actually happening. Okay? No different than, what happened last August in our industry? What happened?
By broker agreements.
Yeah, practice changes, right? The system of offered compensation through the MLS went bye-bye. Now, here's a funny thing. My phone began to ring off the hook, right? I thought we were like getting clear of this thing, and then this fires break out, right? So we're still juggling the practice changes. AB 2992, you must have a buyer broker by law now signed in California, commercial or otherwise. Okay, then the fires break loose. I didn't honestly know what penal code 396 was. And now I'm running around going AB 2992, penal code 396, right? It's great, it's a dangerous place, right? So my goal is to impart not only knowledge, but wisdom. Is there a difference between those two?
There is.
So you can know a lot, but you can still do some really dumb things. Okay, so I'm going to highly recommend that you're wise with lots of practical knowledge. Okay, so price gouging. I'm just going to go through this real quick. It is painfully simple with some little exceptions like, well, what about a 7-bedroom and how does that work with the HUD chart? Okay, so we're not going to get into the weeds there, but what I'm going to tell you is this: it's very simple. The wise person will, everybody just, will breathe. We'll breathe, we will slow down. We get moving so fast, it's our job to assist our client in slowing them down. How many of you make exceptionally great decisions in a rush? Come on, I need to know now. No, we don't. But our industry does that a lot. So truly the knowledgeable, wise professional, I believe, knows enough to slow down and say things like, you need to talk to a qualified landlord tenant attorney. That little sentence, which has been sent out email after email to the market centers I work with, is there so that if Rob Bonta calls me and says, hey, one of your agents, and I go, hey, Rob, I can show you the evidence because trust me, I'm covering mine as a broker in the state of California. Okay, but it's real easy. If the home's been on the market, the home has been rented or advertised for rent in the last 12 months, okay, that seller can adjust the price up 10%, and then if furnished, an additional 5%. Okay, that's what the CAR quickie thing says. Okay, that's pretty easy. Now, agents want to know, just like we did back in August, hey, how can we work around this thing? We are wonderful. Hey, what's the workaround? What's the workaround? What's the workaround? Okay, workarounds can get you into orange. You know what that is? Literally, it's a prison. It's an offense. That's why the headline is criminal charge. Okay, so that's the here. Now, by the way, I don't even go over that with my client until I preface them with, hey, Mr. and Mrs. Client, what I want to let you know is up front. And by the way, before the fires ever got here or anything else, part of what we do in our pre-listing or pre-buyer presentations is we set the stage for there's always a possibility of a real estate transaction that we might say, John, we need to refer you to an accountant or an attorney. We actually begin to educate them up front what the scope of our duty is. Okay. So the reason our industry, there's two reasons why we are not very good as an industry. I'm not saying you as an individual agent because you might be great at this, but our industry suffers from two things: low self-esteem. We want to give answers for everything. So we have a hard time saying you need to talk to a qualified landlord tenant attorney. So the first reason it's low self-esteem because we want to give answers. And trust me, when you call me and say, hey, Chris, I have a question for you. And as you know, Michael is my witness and Steve, sometimes I go, let me check on that. Now I could come down from the mountaintop and say, I've been doing this for 34 years and here's I just make up the answer. In most situations, you wouldn't know any better. Right? But that's not what I did. So I know what I know, and I also know, you know what, let me talk to Jeff Kahn about that, or Peter Hagan about that. Because I don't want to just be kind of sure, I want to be damn sure if I'm giving you advice, don't close your client. Does that make sense? So the advice we give isn't to rain on your parade. Okay, it's so that you do an exceptional job of demonstrating your professionalism. Okay, so jump to the other side. The property's never been on the market, phone rings, come list me as a lease listing. Okay? Don't say this, but the comps say, Chris. I don't care what the comps say. The comps have nothing to do with the value based on Penal Code 396. They're irrelevant. I just told an agent that a few days ago. I said, she kept going to the comps. The comps come. I go, I get it. It's irrelevant. Yellow. You're new. Okay. They're irrelevant. It's this side, it's been on the market. Yeah, I see a face back there. It's like, what do you mean they're irrelevant? They're irrelevant under the state of emergency. Not because Chris says so, because the penal code says there's only two ways you can determine the rental value without kicking and gouging. Okay, gouging? Gouging, thank you. Okay, the first method, the second method is you go to this HUD chart. You go to the HUD chart and you put in 90210. Blah, 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 blah. There's the number. 1.6 times that number. There's your max rent. As Hendrik says, it's a great idea to say, hey, if you're gonna err right now, and again, this is dialogues that I use with clients. If you're gonna err on the side of what? Caution. That's called wisdom, by the way. So again, I don't make these rules up. I'm just telling you what the penal code says, and then what the fair rental value calculator from our friends at HUD. It's irrelevant what the comps say. Okay? So those are the two methods. Now, understand that whole conversation with the customer has been bathed in, at the end of the day, I'm going to give you a name or two if you don't already have a qualified landlord tenant attorney. Because the circumstances, and by the way, if you need to use the big headline, we just sent it out to you. I think it went out to the Market Center already. Okay, you click on the link and you can see Rob Bonta and you can see the big headline that says first agent charged. Keyword first. There will be many. Criminal charge. How'd you like that on your next business card? Okay, so this is the scary straight part, okay? But it's not just an age, I'm just gonna scare you. No, literally, it just hit yesterday, okay? So you have a question, ma'am?
Yeah, sorry, this might maybe is.
Listen, there's no such thing. I don't like drinking more coffee, I'm jacked up enough.
Oh, where do we find this HUD form?
So it's not a form, it's a website.
Oh,
It was included in an email that y'all got with the quick, what was it called? The quick thing from CR that was part of an email that y'all got. And in fact, I think it went out again yesterday. Okay,
Check your email, check your email.
You know how I
It's all out
you
there.
know how
It's kind of
I found it? No, I found it. Yeah, they came out with this new thing. I just found it last. There's this thing called Google. I Googled Google, I found Google, and then I Googled HUD and I found it.
And just, by the way, when you look at that thing and you're like, holy shit, I have a house in Beverly Hills, a 4-bedroom, HUD is saying it's worth $3,000 a month, don't be freaked out. HUD just goes really low on what they think the value is.
So it's not emotionally satisfying, by the way. None of this is emotionally satisfying, I get that, and it is what it is. Okay, the HUD calculator doesn't have any feelings involved in it. How you feel about this is irrelevant. But Rob Bonta, I just felt like, well, I don't care how you feel, we'll put you in an orange jumpsuit, okay? All right, now let's have a little fun, shall we? See, so it's funny when James is here, he'll say something and he'll point at me. So he said, Tom Ferry, which I'm not Tom Ferry, by the way. And then he said something else and he pointed at me and I'm like, well, I'm not that either. But here's the thing, no offense to Tom Ferry's the world. Because by the way, they can help you get business. But actually it was Tom's dad, Mike, who I cut my teeth on way back in the olden days. Okay. By the way, Tom's a master marketer, he can teach how to get business, everything else. However, one of the big gaps in the coaching business is this: maps coaching, Don't tell Gary Keller I said that, actually, I don't really care. Okay, Matt's coaching, Brian Buffini, Tom Ferry, blah, blah, blah. No offense to them, but here's what I'm not telling you. They're not telling you when you're sitting at the kitchen table to build your self-esteem, to say, you know what you know, you know what you don't. Now, has anybody ever seen this form? It's called, what's that, you ever seen this form?
AD,
This form?
SBSA, yeah, statewide fire.
Has anyone ever seen this form?
15 pages.
Okay. You ready? Are you sitting down? You can say it, Bambi, you're good, say it. Okay. How many of you read documents like this? Okay, cool. This is gonna be really fun. Ready? You ready? I'm here to make a point, okay? All right. You read the form, it talks about buyer's duties, seller's duties. Oh, and then this little group, broker's rights and duties. That would be us, by the way. And then it says legal, tax, and contract considerations for both buyer and seller. And you know what it says? You read that one. You're advised to seek right out of the gate. The forms you're having your clients sign say you should seek legal counsel and other assistance from appropriate professionals in order to fully understand the implications of any documents or actions during the transaction. You should contact your CPA, blah, blah, blah. Now, somebody might go, oh, I kind of knew that was in there. So I didn't, unless you get it's like the day escrow's closing. Don't do that. Don't do that. Right, Tiffany?
Right.
He doesn't do that, by the way. Okay, then we get this really robust table of contents. Okay, now, this is where the real fun begins. You're a good reader? Now, what is the SBSA roughly? Steve, you can't answer. What is this form roughly? What is this?
Because you know.
So it's advisory.
The SBSA, statewide buyer and seller advisor.
It's like a disclosure, basically.
Advisor, that it says like kind of what, you're buying a property in the state of California and.
Yeah, it's an advisory. Ding, ding, ding. Good job. You know what the hint was? It's in the title. It's an advisory. And then here's what it says. This is the part. Now, if you knew this, I am super proud of you. Okay, you ready? Now, this is under the category of how much of an expert we are. You ready? All right. So let's pick one. Oh, let's just pick number 5 on page 3. Inspection. Inspections. Any inspection experts in here? Okay. Nice and loud, right? This is the last sentence of that paragraph. What does that say?
Brokers do not have expertise in these areas.
Okay. Surely that must be a one-off because we must have expertise in something, right? So let's just disregard that page for a second. Okay, let's see. I'm like the magician. I'm gonna put my prophecy hat on and just pick one out of the middle of the dock. Here we go. All right, so let's talk about neighborhood area, personal factors, buyer intended to use, high-speed rails, smoking restrictions. Emily, you may ask you to read that really loud. Last sentence of the paragraph, by the way, what does that say?
Brokers do not have expertise in this area.
Huh, that's puzzling. See, not my sleeve. Good reader. So the legal requirements, federal, state, and local, which you know I love, because the RPA talks about in that paragraph. Somebody say it. Somebody knows that paragraph. Steve, paragraph
11?
11. All right. So death on property. Okay, yeah, real loud, loud as you can.
Brokers do not have in this area.
Oh, jeez, what do we suck? Septic systems, brokers do not have expertise in this area. Okay, property use and ownership, building permits, fire insurance. So check it out. You know what we do? Oh, let me help you with that. Let me help you with that. Let me help you with that. Oh, price gouging, smice gouging. You're fine. Don't worry about that. I know how to work around that.
Negotiate.
Everything you say, so you know what we need to get real comfortable with? We need to get real comfortable with saying, hey, guess what? Here's what we do. We point you in the right direction. We make sure you are edified about what paragraph 11 of the real estate purchase contract is. Okay? But we know what we know and we know what we don't know. Is that fair? Okay. Any questions on that? How satisfying is that to you, by the way? Huh?
Not at all. Not a movie.
So I want to let you know, back in October, I was down with 40 brokers in downtown Sacramento with the Department of Real Estate and the commissioner and the deputy commissioner, blah, blah, blah. Now, this shows you what a big disconnect. So I just read to you, and by the way, I can pick any form that we have, the BIA, it wouldn't matter what it is. It's gonna say, can't be the legal advice, can't be the tax advice, brokers don't have expertise. It's all over every document we sign. And yet agents will still call and argue with me. Now, I don't take it personal because they're not arguing with me. They're arguing with the facts. And I understand because I do like to say, hey, here's all you gotta do. Here's how you avoid your capital gain on this. And you do a 1031 and blah, blah, blah. Don't do that. Don't do that. Have enough confidence to tell them what you know and tell them what you don't know. It's out of the scope of your license. Bless you. Okay? So, just understand that. So, by the way, we have a new file review person as of Monday. It's actually my son. He's a broker. Okay? We've been on the backside working feverishly. And we're still working because between command and our checklist and everything else, it's been a damn mess. It's been a project where I probably wouldn't have taken the job if I knew it was that much of a mess.
We lied when we were.
Okay, yeah, they did, thank you, they did. You know, yeah, we got that, I'm like, really? But it's cool, because I love what I'm doing, okay? So by the way, we're getting rid of the word compliance. Now, you're still gonna see it because we can't get rid of it in command. But I told you from day one, I don't like compliance. I want my agents, under my license, to want to get the forms and paperwork in the file to help their client comply with federal, state, and local laws. So they protect their client and they don't get their, you know what, suit off. So when we go through presentations later today, and some of you have heard me preach before, the whole basis of our argument, when we go out and meet with a buyer or seller and get contract signed, isn't that, hey, aren't the boats hip and cool? I mean, I'm very cool, by the way. You see me on the billboard down the street? No, okay. So look, most people do like us though. My wife Kelly, who some of you have met, Kyle, who you will meet, and he's smart, charming, he's just a lovely young man. Father of 3 of my grandbabies, by the way. Okay. So yeah, we could go in and sometimes people just go, hey, we want you because you seem like nice people. So go ahead and sign those people up. But at the end of the day, what we tell people, because we do probably 90, almost 99% repeat referral, we'll work with a stranger every now and again. But we say, hey, you know, glad you had us out. And just so you know, right from the top, we tell them not to choose us because they know us and like us. They're ultimately going to choose us because we're great at our job. There's a difference. Okay, our business has marketed the glamour. So the real estate consumer chooses based on, hey, they're hip and cool. Let's do that. They have no idea what the real estate purchase contract. So we literally sell that. So today, when I talk later in the presentation about presentations, about the job of an exceptional agent is really threefold. It's marketing, negotiation, and transaction management. And by the way, any agent you talk to, if you're in a competitive interview, Mr. Seller, should have a written negotiation and transaction management strategy. How many of you in here right now have a written transaction management strategy and or a written negotiation strategy? No. So if I compete against you tomorrow afternoon, even though I've never sold a stick of real estate in LA, they're going to go, the other agent doesn't have any of this. And we actually use our expertise in the contracts and disclosures and so on and so forth. We talk about paragraph 11, as plain as that sounds. And I'm going to bring that all to life a little bit later. Okay? So Kyle in the role is going to review the file and then say, hey, here's what we need, or we're missing a signature, or whatever the case may be. And then over time, it's not going to, by the way, it's not going to be, you must have this because I don't like that. Okay, I want to have this to where you go, I want to have a complete file. I don't want the BRE knocking at my door.
Can I make a distinction? So retrofit, for example, Sometimes it's required, sometimes it's not required.
Yeah.
Mandatory. I say you should get it all, but sometimes it's not mandatory. And when you have a checklist in command and you're uploading documents, some say required, some say
Yeah.
optional. The idea is to have somebody, to understand what they're looking at instead of, oh, this is not, it's not checked off.
Yeah.
Sorry, I can't,
Right.
it's like, well, do you understand why, what's not checked off, why? So, yeah, so I concur with Steve, that's gonna be really be
So,
changed.
so we're working really hard to upgrade that system. So aside from the system itself, also the person in this case, Kyle, because again, he goes out and lists property, so he knows what should be in a file. Okay, now, by the way, we already talked about the formerly known as 9A stuff, right? You don't know it was formerly known as 9A, but we won't get into that right now. So those sorts of things, nuances. So he and I have already talked about that. What triggers that? I had a great conversation with Tiffany probably a month and a half ago or so, plus or minus. And we were talking about that because she really wants to be great at her game. And when she works with her transaction coordinator, which by the way, Darcy, right? Yeah, she was on the Zoom call and I can tell that they really want to get better, not just getting more business, but doing better business. Because most coaching companies are teaching you to go get more business, go get more business. They don't give a rip or because they really know the coaching companies aren't designed to get you to actually. Coaches don't say, you need to read the contract. They don't say that. They don't care about that. They want to go get more. Okay, that's the way the reality works, by the way. And by the way, they're all guessing on what's going to happen in the market. And by the way, I'm going to say this. Here's what I'm going to say. I'm going to say that before we ever got into the fires, when you do the math in the industry, there's about 470,000 agents in the state of California, and there's not enough deals to go around. So if you do the math on how many so whether the market goes up 10 or 20% or not is irrelevant to you and your own business. It really is. Because if you do the math, it's like way less than one transaction a year per agent. And most of our, yeah, I know, isn't that crazy? Yeah, so if you're doing 3, you're like, wow, I'm a top agent. I know, it's funny, but it's like, you're kidding me. Do the math, seriously. Look at your favorite zip codes or LA County, then, call the association, hey, how many agents are running around loose down here? Do the quick math. It's like, maybe 0.2 transactions per month per agent. It ain't good. So don't get hung up on this market thing. Yeah, you want to have some idea of what the supply and demand equations are, what the trends might look like, talking about generational wealth, so on and so forth, if that's, something that's important to them. But you're ain't an expert. I have a little shtick I did back in 2010. And I threw some papers that day too. I had a report from a guy named Robert Schiller. Anybody know who he is? Anybody heard of the Case-Shiller Index? Okay, by the way, I have a degree, a bachelor's from UC Davis up north. Okay, this guy's an Ivy League, blah, blah, blah. He's famous. In 2007, he wrote this magnificent report about the fact that the housing market really wasn't going to get that bad. Okay. So I walked up with the report and I read a couple of things and I said, guess who this was from? And I told the room, smarter guy than me, he's got a PhD or something from either Harvard or Yale, one of those fancy places. Smarter than me, but guess what? He's wrong. So I'll let you know a year from now what happened last year or this year. Okay. Now I want to give you an idea what a DRE inquiry looks like. So some of my, I know, right? Okay. So by the way, so is this recorded? Yeah. I have several of these love notes, by the way. Oh. Okay, I get all of these because it's me. It says for Calabasas and not Calabasas. I have one for your lunch center too, don't worry. Attention, Kris Vogt. If you ever wonder what my name is, I used to catch heck with that as a kid. But this was on a lease. Now this had nothing to do with price gouging, by the way. But this, I'm going to tie this into file review because when I got in this world, I'm like, hey, where do you put all your? Where do you guys keep your communication logs? Let me just ask you that right quick. Communication logs. Where do you keep those currently?
Email folder.
Communication logs. Right. So how do you get them? How do you get them to us? That's what my question is. Because
Yeah,
you know to do that, right?
Yeah, I do this.
Okay, I'm being a little funny, but I'm also shaking inside because the DRE says something. The DRE says a broker must reasonably supervise their wildcats, agents, okay? Okay, that's what they say. They say that I'm supposed to reasonably supervise y'all. Okay, that's the charge. So part of that, by the way, means turning your paperwork in, metaphorically, into command. Timely. Not the day escrow's closing, the week before, after. I've already notified ownership that apparently one of the other market centers brokers, no offense to them, they say, well, we don't want to bug the agents with all those annoying command notifications. So just tell them to turn it in at the end of the deal. A broker can't review a file. Okay, so that's the first part. Then there's the communication logs, all the emails, all the texts, all the phone calls we've had with people. Isn't this exciting? You know, the DRE says your broker is supposed to have all those. Okay, now my little 8-agent company, we actually have a little thing where you actually we put in all of our emails, all of our stuff, because, you know, if we ever get audited or sued or anything else, here you go. Here's our documentation. But I want to go over this just so you know when they ask for, when somebody rises to a claim of a Department of Real Estate issue, what they do is this. They say, they're very friendly, by the way, at least in writing. They want in this case, they want a copy of 2 of the lease transaction files. And by the way, these are from 2022 and 23. So they lag a little. So if you did something naughty yesterday, you're probably not going to get caught for a couple of years.
Also Corona.
Okay? And by the way, when they send these, when it comes to the Department of Real Estate, we have no idea what the issue is. Okay, but let me just tell you what they want. They want the listing agreements, they want amendments, extensions, and modifications, all written authorization, advertising, lease contracts, receipts for deposits, counteroffers, other writings, all disclosures drafted, signed, or prepared by landlords, tenants, and real estate salespeople, all marketing of the subject property, including third-party real estate websites, all rental applications. On the buy-sell side, it's all copies of all offers, accepted or rejected. A copy of, oh, this is a great one. I love this one. A copy of the tenant screening guidelines.
Phase part.
Please,
By
please.
the way, did they know something that they asked for it? Did they know on the?
No,
file
here's how it
something?
works with DRE. No, so if we get sued, we get a claim letter. And they say, hey, we think your agent did something. Here's what we think they did wrong. Give us this money and we'll go away. That's on the claim side. When it gets to the DRE, they don't tell us anything. They just say, we're investigating your agent, and here's what we want in the file. So the reason I'm bringing this up in the context of the file and what the broker requirements are in California. And again, my requirements only align with what the DRE says. That would make sense, right?
Hello, Florida.
So here's the simple rule of thumb. How many of you use a transaction coordinator? Okay, so if I've not met them yet, here's what I should say. Hey, we need everything in command timely. Now, some go, where do we put it? I don't care, just get it in there. As long as it's a data dump early, we're good. Okay, I was asked to sign a commission advance form yesterday. $42,000 commission advance. From a company, because they got to make sure. So what would a responsible broker do? Well, be sure before I sign, because I actually read the stuff before I sign it. That sounds silly, right?
You do, really?
Yeah, I know, it's crazy, right? So I read it, 42,000, I look at the property address. Feel like, Captain of Star Trek, I go on to command, pull up. There's no file. And I'm supposed to sign a form authorizing or warranting that this commission is due. Well, how is that? And by the way, it's a very experienced agent, by the way. New people don't make these kind of errors. Okay. So I reach out to team leader first because I don't like to yell at agents until I talk to the team leader. I don't like that. Right. So I called, I said, I called and just talked to the team leader. I said, I'm happy to reach out to them. Promise I won't yell at them. And this agent does have a track record of not turning in paperwork timely. Okay, so I use this as an opportunity to remind them once again, and then I followed up with an email to say, hey, you need to turn your stuff in after our conversation. Because I'm not signing any stinking form without a document. Would any of you? Okay, so a lot of this stuff, we've got a long way to go. So when we get into the presentation section at some point, if for those of you who are gonna hang around, we're gonna talk about how do you then build this into a presentation. How much knowledge you have in the real estate purchase contract, the civil codes, as boring as that might sound, the contractual requirements, so on and so forth. Right, a couple of you in the room who I've talked to over the time and worked with agents to help support them, you know that there's issues. If you talk to any escrow officer, we just had one up at Calabasas yesterday, and we were talking about it. I just said to her name's Ashley. I said, so Ashley, and if your escrow officer was here too, she'd say the same thing. I kind of go, is it kind of a freak show out there? I mean, like documents getting late in the escrow, people freaking out, going, hey, where's the 9A report and where's this and where's that? That's because we've always done this business backwards. We get everybody into escrow generally, and then we start trying to chase down the paperwork. And what's made it worse is we've said, oh, and as an agent, it's been neat. So I'm just going to have it go to my TC, and they're going to do it. And if I get sued later, I'm going to blame them in deposition. Which actually happened. They blame their transaction coordinator. I get agents that say, well, that was the escrow company's job. Check this out. It's not the escrow company's job to order the 9A report. Whose responsibility is it to order that report?
Sellers.
It's the sellers. Now you're going to help them because you're a great agent. Whose responsibility is it to complete a TDS? The sellers. And it's your job to help them make sure they know that. It's not escrow's job to order the NHP.
I do it. You know how long they 9/8 good for?
6 months.
6 months.
So here's the thing though. So what we're going to talk about this today is we're going to talk about how you step through some of these things so that you can upfront get your client in conjunction with your escrow officer, because if they help you assist you in ordering some of these things, fine, but have a system to do it, because these poor escrow officers are going, well, really, we're just supposed to be the neutral third party. But because it's so competitive out there and they want your business so badly, they're like, hey, I'll sell my next to kin if I can get your next escrow. That's where the whole NHP ordering thing began, because they were like, well, Fidelity will do it, or First American will do it. If you won't do it, I'll go down there because they'll do it. It's not their job.
First Pacific does it.
It's not their job. Ask any escrow officer, is that actually your job to order those reports? No. Okay, but that's how our industry has eroded. It's eroded. And the theory is so you can go out and prospect more and lead, and I get that part. Okay, but when you start looking at the average transactions per agent, even with some top agents, particularly your price point, if you're doing a dozen transactions a year, which will make you pretty good living down here, okay, you can slow down long enough to make sure that you do nearly a perfect file. If you're doing 100 a year, they need to build team and a system and a structure around that. Okay, so enough of the sermon. But it's really, really, really important, because everything I'm talking about right now is literally what we're selling at the kitchen table. The young couple that my wife just had sign their exclusive BRBC, we went through the same thing. We walked them through the agency disclosure. We actually discussed with them what fiduciary duty means. We actually talked to them about paragraph 11. Why? Because they're going to buy where there's HOA. Okay, do you think the fire hardening stuff is important? I think so. Here's my prophecy. We've closed transactions without documents we should have had in that house, either burned or was damaged. Guaranteed. Because as they're making these phone calls to their insurance company and their tax person and everybody else, and they talk to their attorney, this is really not real estate file. Did you even know you were buying in a very extreme area? Well, yeah, I saw the document, it was like 2 days before escrow was supposed to close. Oh, did your agent tell you had a statutory rescission period based on see that document? Yeah, you get this? This stuff matters, but as an industry react like it. So this, at the end of the day, regardless of what Tom Ferry says, Mike Ferry says, your lender, your escrow people, blah, blah, blah. Your value is in your knowledge of the real estate purchase contract and all those boring disclosures. Not very glamorous, is it? But you should be convicted, because literally, that's what we're going to go through the presentation today. We're going to talk about how then you build this into a presentation and create a point of differentiation. And it is different. Because your 10 questions every seller needs to ask that you give to us, a prospective seller up front, or your 10 questions every buyer needs to ask before you go on a buyer consult, says, hey, do you have a copy of a written negotiation strategy? Hey, what's your knowledge of paragraph 11 of the real estate purchase contract and how you protect my interest in utilizing that paragraph? That's literally what our stuff says. How do you protect my fiduciary duty? Right? So we're going to play with some of that stuff because people will go, And if you go on a competitive interview and you go, great questions, pre-listing package, confirm the appointment, show up, present, ask for the order, answer questions, overcome objections. Oh, that's 7 steps I just gave you. Use your level of personality, all that good stuff. But you're selling the true value of this business. Our business has struggled forever. When the practice changes came, oh, we got to be able to articulate our core value. What are we talking about? We know what our value is? No offense to James, but we're going to go to class and James is going to tell us what our value is. We're going to go to a restaurant. Like, what are you talking about? You want to know core value is you better know this stuff. That's our value. Be nice, say please and thank you, open the door for them, send them the lovely parting gifts, all those nice icing on the cake things. That ain't the cake, boys and girls. That's what we've been sold. We've been sold a freaking lie. And every new agent that gets in this business goes, hey, what do? They don't see all the blood work behind the scenes. They don't see the title. Yeah, okay. So I'm going to shut up now. Any questions? No such thing as a dumb question, by the way. Yes.
Yeah.
Joshua.
Yeah. Wow. You know, I think what you said is very, very important. Entire today. Is there anything you're going to send via email? Because you know, since agent doesn't matter. I think that we need to be brushed up all the time.
I agree.
Everything you're saying.
Yeah. No, I agree 100%. So yes, so we'll so who does everybody know that I'm doing a presentation class? Does anyone know? Not know. So if you can't stay, cool. If you can, that's awesome too. But Henrik would tell you, make sure you read your emails because your market center does a great job. It's an e-bite to everybody. Blah blah blah. And so I'm going to walk you through 7 steps to great buyer presentations, 7 steps to great seller presentations. We're going to talk about what should go in your upfront packages, which you can actually also use at your open houses to create a point of differentiation. Because most buyers, and when they go through an open house and they choose their agent, they're not necessarily choosing the best agent. They're choosing the agent that they click and bond with. So be great at clicking and bonding. That's awesome because people will work with you because you're really nice and like a great doctor. If you've got great bedside manner and you are technically excellent, that's a doctor I want. That's the agent you want to be. That's the broker.